Hello everyone, welcome back to my videos. So in my prior video or my last video, I explained about the fund of funds, and I also given one scenario where we checked how we can evaluate the asset of the parent fund and how the parent fund and the underlying fund, how it is related, and when we are checking the NAV of the underlying fund, if there is a movement in the top fund, how we have to dig deep and check for the underlying funds also. In today's fund of funds topic, I am going to explain two more scenarios which we usually come across in the fund accounting. So first scenario, which is very important and which is I will say normally where the fund accountant tend to do mistake. So that is one of the scenario where I have selected, which is, let's say there is a one investor is coming into the top fund or a parent fund. So let me explain you with one of the diagram. Let's say there is this investor who is coming into fund A, and I will stick to my last example. So this is one investor. This investor is coming into fund A with 20 lakhs. Okay. This is my top fund. This fund is investing in these two underlying fund. Okay. So now I have explained also last day, we will go with same, that fund A is holding 100 shares of fund B and 100 shares of fund D, and fund B is a debt fund and fund C is a equity fund. Okay. And now let's say, I will come to this. So let's say one investor is coming in fund A with 20 lakh rupees. Now what is happening in fund A? When an investor is coming into fund A, this particular scenario, when an investor is coming on investing in fund A, it is going to be a unit deal, right? Because you are going to book a subscription for fund A. That is what is going to happen. Then fund A is not going to keep that money to itself. What fund A is going to do, it is going to flow it down to its underlying funds. So what it is going to do, it is going to then, just to make it simpler, I have distributed it within like 50-50, that 10 lakh rupees it is going to invest in fund B and 10 lakh rupees it is going to invest in fund C. So what happens from fund A when there is an investment moving into this funds? So think about it. There is a one fund, it is going to buy more shares. So it is going to buy more shares of fund B and fund C. So if I think this scenario, this is nothing but a transaction or buy trade, right? I think you are all with me in this. Fund A is buying shares from fund B and fund C with this 10 lakh rupees. So then it is nothing but, from a fund A perspective, it is nothing but a buy trade is happening. Now we will be checking it from the fund B and fund C perspective. If we let me explain you on this. So what is happening from fund B and for fund C? It is having a top fund. Fund A is giving 10 lakhs and 10 lakhs to this funds. So for fund B, what is happening? 10 lakh rupees is coming. For fund B, fund A is nothing but another investor. So this particular transaction for fund B is nothing but unit deals. For fund C also, it is unit deals. But the same transaction, when we are looking from fund A perspective, it is a buy trade. But when I am looking it from the underlying funds, it is a unit deal. So just to have the nutshell of it, trade for top fund will be unit deal for underlying fund. Okay. So this is the one basic thing we have to always remember. If there is a trade in the top fund. When you have a trade, you are booking a trade in the top fund, these trades are booking, you need to make sure from the fund B and fund C perspective also you are booking the unit deals. So why I am telling this, because I have seen in my career also many times people miss out on look at it from the both the perspective. Let's say you are doing fund B, okay, and you got the trade file for fund A where it is written that fund A is investing 10 lakh rupees in fund B, and you don't understand it and you think, okay, it is a trade file for fund A, nothing for my fund. But then you are wrong. It is a trade file for fund A which is actually acting as a deal for you. So you need to go ahead and book a unit deal or a subscription from your fund as well. So always be mindful, even if you are doing this whole set of funds. Sometimes it is so happen the whole set of fund is given to you and you booked the transaction in fund A, you missed to book this contra entry in fund B and fund C. So always make sure whenever you are doing a FOF and you have responsibility of this kind of things, like there is a investment is happening in fund A and they are moving that money to the underlying fund. When you are having a transaction into your underlying fund, make sure in your underlying fund also you are having the subsequent deal or subscriptions. So that is one of the scenario. Let me give you another one scenario which is also very common and it is somewhere the opposite entry. So first I told you one scenario where money is moving from the parent fund to the underlying fund. Now in the scenario 3, we are going to check what is going to happen when the money is going up from down. So let me give you the scenario 3. So same example, fund A, fund B and fund C. So this fund is investing. Now let's come with an example. Let's think about it, and it so happens so many times that fund B or fund C is distributing. So what will happen then? So whenever you are having an income distribution for, let's say on 30 June, it is a quarter end as well. Let's say on 30 June, these two funds are doing an income distribution. So whenever there is an income distribution, these funds have to book the income distribution which will be payable to the investors of this fund. So this is nothing but income distribution will be booked in these two. Whenever there is an income distribution, there will be a NAV drop for these two funds. Okay. So this is also I have explained in one of my videos, which is the dividend versus price change. Whenever there is the distribution, as it is coming from this earning, you will have a price drop. So this is what happening in fund B and fund C. You have an income distribution, you are having a price drop. How you are going to account it in fund A? So whenever there is a distribution in the underlying fund, from the B and C perspective, we are done. Now think from A. So for A, these are nothing but security, as I am telling it again and again. Even if this is a fund, from fund A's perspective, these two are nothing but security. So when these funds are distributing income, from fund A perspective, this is nothing but dividend coming into the fund. So here for these funds, these are payable. These parts are payable. And paying to whom? Paying to whom? Paying to its investor. So this income will go into this fund A, and for fund A, this will be nothing but the dividend. So when you are booking it for fund A, actually you have to book it as a dividend or as an income receivable. And as I said also, you can also see whenever there is a distribution, there will be a NAV drop. So here also you can see there is a dividend distribution, there is dividend coming, and the underlying security, underlying funds price has dropped. So this is a common scenario we see. So this is also one of the point you need to always remember. If you are doing these funds, if you are doing the underlying fund, you are booking income distribution, you have to make sure that the top fund also this dividend is captured. Otherwise, what is happening, let's say you are having this underlying fund, you have booked the income distribution and you have a price drop here for fund B and fund C. But the top fund, whosoever is the fund accountant responsible for doing the top fund, they forgot to book the distribution because it is a fund, right? So it will not be coming automatically by the systems. You have to maybe manually go ahead and book the distribution. But if you are not booking the distribution, there is already a price drop. You are taking only the one leg of it. So you are only taking the price drop of the fund A. You are taking the price drop for fund B. You are not taking the income which is coming. So in that case, your NAV will be wrong. So that is why it is very important whenever you are doing a FOF, you need to check always from both the perspective. You need to check the fund from underlying fund perspective as well. Also, you need to check the fund from the top account or the parent fund perspective. So this is why I explained it in so details, because this is, as I said, it is one of the very common scenario in fund accounting. And also if you are aspiring yourself for a career in fund accounting, or you want to understand the concepts very well, this is one of the important area you need to make it very clear. So I will come up with more interesting topics for you to explain. And if you also have anything which you want me to make a video about, please tell it into the comment section. I will definitely come up with more videos. Thank you very much.